Hello, my friends. This is Doug Fabian. Welcome to my weekly ETF report. Today is Wednesday, July 1st, 2014. Of course, we're dealing with a holiday-shortened week this week. First week of July, 4th of July weekend. I hope you have a fun time with your family and friends. Now, let's get to the financial markets because this is an important time of year. My first topic today is talking about the second quarter scorecard. I'd like to have you take a look at these numbers. They're not very impressive. I gave you some U.S. market indices, international indices, and a look at bonds and gold. But as you can see, the second quarter was pretty negative for the major stock indices. The Dow down 1%, S&P slightly negative. The QQQs, the NASDAQ 100, the only market index higher outside of oil prices in the second quarter, and even the international markets were negative along with bonds and gold. Now, the second table I want to share with you is the year-to-date numbers, and here we have a little bit better news. S&P 500 flat, Dow down 1%, but EFA, the international markets, up 4% so far this year. The emerging markets up 1% so far this year. Bonds, gold, and oil all negative. Now, that's the scorecard. You know, how you did is dependent upon how you're allocated. Which brings me to point number 2 today. When we take a look at the prospects for the third quarter, and I'm going to talk about this in great detail on this week's radio show, but we've got some headwinds in front of us on a short-term basis. We have the uncertainty of Greece, which really hit the markets hard this past week. We have the uncertainty of the Federal Reserve and whether or not they're going to raise interest rates, depending upon how strong the economy is. Now we have news about Puerto Rico and China. All of these things kind of negative for the markets, and they need to be resolved before we can gather enough energy to begin a new uptrend. Now, the last thing I want to share with you today is a chart of the S&P 500. And as you can see, we haven't made a lot of progress, certainly in the second quarter, which was slightly negative, but so far this year. But what has progressed higher throughout the course of the year is the 200-day moving average of the S&P 500. You can tell by this chart, moving average is still moving higher. And this is an indication that the overall trend of the market is still positive. Now, if we were to break 2004, which is, a key level, the 200-day average on the S&P 500, I'm sure it's going to bring in some selling. At this point in time, it doesn't look like this selling would result in a new bear market. It's just going to be some sort of mid-cycle correction. So now is a time to put your watch list together as to what you want to buy on some sort of market correction. And once this uncertainty gets resolved, we can start seeing better opportunities on the upside. A reminder, out at etfu.com this weekend, we're going to be posting the results of the quarter for many of the popular exchange-traded funds, as well as the top performing funds so far this year. And of course, on ETF Success with Doug Fabian, my weekly radio show, we're going to be talking all about preparing for the third quarter and beyond. So thanks so much for tuning in this week, and I'll be back at you again next week.